Cast is now starting. All attendees are in listen-only mode.
Good evening, everyone. I am Jay Parsons, the University of Nebraska-Lincoln, and it is my pleasure to welcome you to this evening's webinar titled Lamb Markets and Managing in These Uncertain Times. This webinar is brought to you by the Let's Grow Committee of the American Sheep Industry Association. We want to thank them for their support and encourage you to visit the ASI website to learn more about the sheep industry and to access the large volume of resources available there to help you be successful in the sheep business. The URL for the ASI website is www.sheepusa.org. I'd like to remind our listeners that this webinar is being recorded. All webinar registrants will receive a follow-up email within the next 48 hours with a link to the webinar recording, as well as a link to access the webinar slides. The links will also be posted on the ASI website along with recordings from our previous webinars in the Let's Grow educational materials. We're slated for about 45 minutes of presentation time, followed by about 20 minutes of questions and answers with our presenters. Feel free to submit your questions at any time, including during the presentation, by typing them into the question dialog box at the bottom of your control panel. I will be monitoring these questions throughout the evening, and I will moderate them to our presenters during the Q&A session after the presentation. With that, it's now my pleasure to introduce this evening's presenters. Jim Robb is a senior agricultural economist at the LMIC. Twice he has been center director, serving in that capacity for a total of 24 years. Jim has served on numerous advisory committees and working groups throughout his career, authored or co-authored over 1,400 articles, research reports, and newsletters, and given way too many presentations to even count on livestock marketing and economic topics. Since Jim will be retiring at the end of the month, we want to start by wishing him well in his retirement, thanking him for his great service to the livestock industry, and tell him we're especially honored to have him here this evening to present on this topic of what's currently happening in the sheep and lamb markets. Caitlin McCulloch is the director of the LMIC. Her expertise is in cattle, hog, dairy, hay, and grain sectors. And like Jim, she's also published numerous articles and papers through a variety of channels and is a frequent presenter at national and regional meetings. So I think I'm going to turn it over here now to Caitlin first, and then we'll go on from there. So Caitlin, it's all yours.
All right, thank you, Jay, and very happy to be talking to you guys this evening. I wanted to give you a little bit of background on the LMIC, or Livestock Marketing Information Center. So we are a nonprofit cooperative effort between land-grant universities. We have 29 members that you can see on that map. We have 13 associate members that we work with, including ASI, but the list is on your screen as well. And then we also work with 8 USDA agencies who we interact with in a variety of ways, but include data, resources, etc. So with that, I'm going to turn it over to Jim Robb, and thank you again, Jim, for providing this presentation before you retire.
Thanks, Caitlin. This presentation will be a little bit fast and furious. There's kind of a lot to cover. I'm going to start out talking about kind of monitoring and managing in this economic environment. And then we'll kind of switch over to more of the market situation and outlook, talk a little bit about the domestic consumer, lamb and mutton imports, competing meats. I want to talk a little bit more detail about forage and crops, especially this year, given the slaughter situation and what Mother Nature is dishing out. Then we'll launch back into lamb prices, where they're at, and some of the drivers in the marketplace, and then we'll have time for discussion. I want to highlight down here at the bottom that all these data sources are from the USDA. I know we don't like to tell USDA, how many lambs we have or what our lambing crop is and things like that, but we have to think about too, USDA is going to fund research for the industry, and if they don't have those kind of data, they're not going to be funding as much research as the industry probably deserves. And certainly politically, the people in Washington, D.C. do not understand your industry. They look at the numbers first, and then they decide on priorities. So the size and importance of your industry needs to be well relayed to them if you want to get political support and support for your industry overall. So jumping into the monitoring and managing in this environment, and this is a difficult economic environment. I started doing sheep and lamb market outlook in 1991, and this is one of the most challenging periods that we've ever had. So it's hard to be real specific. There's a lot of moving parts, probably more moving parts than we normally have, but we're going to talk about the managing part a little bit first. We think about the environment, though, the volatility is inherent in this type of marketplace. And what I'm talking about, all the way from the consumer side to the restaurant side to the packer side, it's a hand-to-mouth market. It tends to become that, where people don't tend to buy ahead, and then we get prices running up, prices running down on a short-term basis rather quickly. We've had disruptions in the packing plants. The lamb industry has faced similar disruptions that we've had in the poultry industry in the United States, the beef industry and the pork industry, thanks to COVID-19 and the disruptions there in terms of being able to operate packing plants. Even in the auction barn, we may have buyers show up one week and not the next week, and that being much more common than it has been in recent years. And then we have the added dynamic that none of the other industries have faced in this environment, and that's the Mountain States rosin plant situation in Colorado. And I call that an ominous dark cloud. And those of you, you can read the ASI newsletter from last Friday. It gives an excellent update from the Greeley Tribune. But Mountain States has filed for bankruptcy. There's hope, maybe, and there'll be a bankruptcy sale in early August. And we'll see how that shakes out. They're about 20 to 25% of slaughter capacity in the United States. They're a very important player. We do have a new slaughter plant in this state, but it's not yet operating and it has no fabrication capability. So it's been a bit delayed. And so this dynamic of getting animals processed is very precarious in the lamb industry. You have to watch those developments as we look ahead. And we're talking about bunching up animals. And so that, in the marketplace, but also that leads us into the next topic, which is monitoring forage conditions very closely, especially when we have drought conditions like we have in much of the West, Northern Plains, Southern Plains. Wyoming, for example, has gotten very dry in the last month, according to the drought monitor. Pasture and range conditions are precarious in much of the country. So we need to reevaluate our on-farm production, especially in this economic environment where we have to hold animals out in the country. All the forage-based animals, the sheep, the goats, the cattle, we're holding more out in the country than we normally do, and we'll probably continue to do that as we look to the months ahead, especially on the cattle. So there's a lot of competition going on. We not only have to look at our own operation, we need to look at our region and nationally at those conditions, because those conditions, as they change, could cause a bunch of animals to come to market very quickly, and that can have a dramatic impact on prices. And I want to watch for, and I think you should watch for potential announcements on the CRP program, Conservation Reserve, any developments, any announcements. There's a bill trying to make it through Congress, Washington, D.C., to kind of open that up for these types of situations as opposed to just drought. But this needs to get on track to benefit the ruminant industries, help us manage through the market environment that we've been dealt with. And we need to watch feed costs very carefully, especially corn. Least cost rations can change very quickly in this environment, and they can go up and they can go down. And so the mixing and matching there becomes very critical. In terms of planning, I often talk about cash flow being a critical thing, and we need a cash flow statement is our monthly, usually, flow of income and expenses. But it's also that needs to be very much tied to our marketing plan. There's a direct link between our financial statements, which are the cash flow statements, the balance sheet, income statement. The cash flow statement links directly to your marketing plan. The marketing plan changes, the cash flow needs to change in tandem. You need to look at it very closely and very critically in these types of environments, given the volatility and the risk. And then we need to make plans that adapt as time unfolds here. And we need to communicate those plans to our spouse or whoever our business partners are. I like to talk about ruminant management and forage-based systems being a sequential decision process in every year, but it's magnified in drought years, and it's magnified by black swan events. you could call the packing plant closures black swan events. When we overfinished lamb several years ago, we had a black swan event and we crashed the market. Now, black swan events, your survival is trying to talk about staying power, and that's your balance sheet. That's whether the bank can liquidate you, whether you have assets to make it through. So it's about survival. It's not about risk management because of the drought swan so much, or black swan, but we're rolling that together, unfortunately, in some areas right now as we speak, unless Mother Nature cooperates pretty quickly with some drought pressure on top of that. Drought is also a sequential decision process. You make a decision, you reevaluate, you move forward, whether we early wean, how we're going to manage forage, et cetera. It's a sequence of decisions and not just making a decision. So those are the keys to be watching for and to be monitoring for, especially magnified, we think, in this economic environment. The COVID-19 has become both a demand and a supply story. In marketplaces, we have the supply side of the industry, which is largely you all, producing lambs, processing lambs, et cetera. And we have the demand side of the industry, and that has to do with customers, both at the retail side and the restaurant side. And those customers do not care about your cost of production. They're looking for quality characteristics, something that they find value in, that they're willing to pay a price for. And we have to charge quite a bit more for lamb because the costs of production are much higher than it is for example, pork or chicken or turkey. So this coronavirus is kind of the double whammy. We not only have had some demand issues that will continue due to the economy being in recession and especially the restaurant sector really lagging here. And then we have a supply situation that was not enough supply a little while ago. Now the lamb industry actually benefited by that. And we'll talk about that a little bit more. But in the whole, in the marketplace, when there was not enough beef and pork on grocery store shelves, lamb sort of lucked out, and we were surprised because we're very dependent on the restaurant side in the lamb industry, but we were able to get quite a bit more product in the grocery stores. But now we're on the flip side of that, where the supply side is increasing and increasing dramatically compared to a few weeks ago for all the red meats and poultry. And as you know, the markets have changed. This is a picture of a UPS vehicle in Nebraska, and it's fully 18 miles from the nearest paved road. But to this particular ranch, the UPS driver shows up just about every day. I told the ranch couple that they probably see the USPS driver brown truck more often than they see their grandkids, and they agreed with me as they frowned. So the whole dynamics in this marketplace is an opportunity, but it's also changing, and it's changing rather quickly. In terms of the U.S. consumer, we'll look over here right in the recent 3 weeks, which is hard to see on here, but the point is the consumer sentiment has actually picked up here in recent months. This is a monthly graph. And from a big picture perspective, consumer sentiment, how they feel, even though we're in a much bigger economic slowdown than the last recession, the Great Recession, consumers actually feel better. And so this is a good sign. Even in this economic environment, consumers are starting to feel better, and they feel better than when they felt back in 2008 through 2011. So that's a hopeful sign, even though we have a lot working against us in the meat industry from a logistics standpoint and production standpoint, especially processing. Lamb imports are another key component of the industry in the big picture story. And lamb imports in the month of April were down year over year, above the 5-year average, but down year over year. The lamb imports, mostly because of the drought in Australia, essentially ceasing. They're starting to rebuild their flocks, and they're no longer dumping all this product very quickly. And increasingly, the trend over the last 2 years has been China has stepped forward buying more and more of the Australian and New Zealand product. Now, Australia and New Zealand together are 70% of the world export market on lamb and mutton. So they're the biggest players. 70% comes from those two countries in the whole world marketplace. Now, countries produce their own product, but they're really the swing card. So we think these lamb imports actually were fairly supportive of the marketplace over the last 2 months as we ran into these issues in the industry. You can see it from that graph. Now, one of the things in this industry that is a little bit subtle is the distinction between lamb and mutton. And usually we import quite a bit less mutton than we do lamb. And that's the normal trend. So we focus on lamb imports. But if we look back at the month of April this year, or March of this year, lamb imports were up on that previous slide about 2% year over year. And in March, they were up, and April, they were down 22%. But the mutton imports were huge. Mutton imports, 2 months ago of data, that would be March, were up 255% year over year in the U.S. That's not percent of a year ago, that's percent increase, 255. And in April, it was up 120%, which is 2 times. Now, this is a dynamic in international trade, and we started to get pretty worried about the amount of mutton. Essentially, the underlying issue is China. And where does the mutton go if it doesn't go to China, especially with the large liquidation that was occurring up until last couple of months in Australia. New Zealand now has a drought. The good news is, looking at the data that just came out of Australia here a couple of days ago, is that the shipments that happened in April really fell off from Australia. So those came to the U.S. in May, but they're declining precipitously. And so the shipments coming to the U.S. have fallen by 50% in the month, and they're up fully 50% to China. So the world is a bit returning to normal. This mutton product, we're taking some of the pressure off the U.S. marketplace in this month and last month, and it will show up mostly this month and next month due to these mutton imports. So we've been real concerned. It seems like China's taken that product, taking it aggressively, and also taking lamb. So we've had a bit of a turning point. So one of the keys in this graph here is that this is U.S. imports as a percent of domestic production. We import more lamb than we produce in this country on a carcass equivalent basis. That's calculated by USDA. This uptick, though, in 2020 is almost all mutton. And in fact, looking at the data from last week, we may be overestimating this slightly. And the downtick is that the mutton won't be there. So these lamb imports is actually the lamb that we really compete against in this country have been pretty flat, and we expect them to be pretty flat for the next 2 years, just talking about lamb. Now, we had a dramatic increase before that and another big run up there. So this story on the international side, because the drought is ending in Australia, et cetera, world prices have changed. The dynamic of international flows of lamb, and especially mutton, have changed dramatically with China needing so much animal-based protein due to the African swine fever issues in their hog industry there and their growing economy. So this import side, even though it's daunting for the U.S. industry, in economics, what causes things to change is the rate of change. The rate of change is nothing like it was a few years ago, and our forecasts are that we kind of stay on this pattern for at least a couple of years. A high level, but not increasing. Now we're going to talk briefly about competing meats. From a lamb perspective, when we look at research historically by economists, there's much more impact on the lamb industry from the pork industry than most people would guess there is. Largely that's because of our competition at holidays. That would be Thanksgiving, Christmas, and Easter. So what are these other sectors doing? Well, these other sectors have suffered. They've made dramatic adjustments too, along with the lamb industry. And we were expecting total red meat and poultry supplies to set a record large level in 2020 and again in 2021. And that may not happen now, certainly not for 2021. These other industries are pulling back. The economics are poor enough that the beef industry quit growing as of January 1, 2020. It's already shrinking. The hog industry has slowed their rate of growth, still growing, but at much slower pace. And chicken is also slowing their rate of growth, and turkey is actually still declining. So that big picture of competing meats is a little less daunting than it was, even though we're at high levels, than it was when we talked about our forecast 6 months ago even 4 months ago and certainly last year. Those competing sectors are adjusting very quickly in the face of the economic environment that we're facing. Now I want to talk about forage crops. These are key to the viability of the ruminant industries. And drought is very apparent. The latest drought monitor would be June 9th in the western U.S. Now we're technically for the monsoonal flow of moisture to start to come to this part of the world. The first date of monsoon is June 15th, and it ends about September 15th, and when we just take our chances in there. You won't get much help in this part of the country due to monsoon, but you potentially can in this part of the country over here. But we have to wait and see, and it's very precarious. The other thing to note is that the Midwest corn crop, that part of the country looks very good. Even though the crop condition ratings have dampened in the latest week, you know, this corn crop has huge potential, which is very important to feeder lamb prices. So potentially we can have a record large corn crop in 2020 in the United States. Not a lot of demand. Ethanol industry is still pretty weak. We have some pullback in the livestock sectors. So we can have the lowest corn prices at harvest this year that we've seen in many years. We already have corn in South Dakota this last week at farm level at $2.85 a bushel. That's the lowest in a long time. So this dynamic of being able to feed lambs and least cost and how you do all this, it's very important to understand how big the potential is of this corn crop. Now we really won't know the potential till after the 4th of July, about a month, less than a month from now. But at this point in time, USDA is probably underestimating the size of the corn crop and overestimating corn prices. At least that would be our assessment. You can see the pasture and range. Now, only an economist would look at pasture and range and decide to look at the percent that's poor and very poor. Most rational people would want to look at the good and excellent pasture, but we're not normal people. But the poor and very poor has increased here recently on a national scale. It's increased in the southern plains, it's increased in the northern plains, and it's increased in the west. It's improved in northern Florida, which really doesn't matter much to most of the lamb industry. So certainly something to watch and something that can change the dynamics pretty quickly in terms of how and when feeder lambs flow to market. The drought in South Dakota a few years ago, we had very early feeder lamb sales. We saw the lambs on feed in Colorado increase very early, and that changed the market dynamic that year. Now, U.S. hay stocks actually put us in pretty good stead in this environment. The year-over-year percent increase in hay stocks nationally is 37%. That's a percent. That's not a number. And you can see that a few states have some problems. The Southeast has some problems due to there, but most of the U.S. has some pretty good hay stocks coming into this new crop year as of May 1, according to USDA. But again, as we move through this year and we look at the dynamics this year, what we do with our feeder lambs, how we're going to manage our forage-based situation, paying attention to the hay crop and what's happening in your area and in the multi-state region could very well be beneficial in your planning process. Corn prices have picked up a little bit. We had some pressure in the feeder lamb last year market when corn went sky high, at least $4.50 a bushel. We're probably talking about corn being in this range or lower come harvest this year if we have this corn crop. So certainly something to watch. We just have to look back to last year, or if we start getting a drought after the 4th of July, this market can change very quickly on the feedstuff side and hence on feeder lamb prices. So with that bit of background and rambling by Jim Robb, let's talk about the lamb markets a little more directly. And at this point, your speaker will take a sip of water and we'll charge on some more. So these are feeder lamb prices through last week. This is a market that does not exist. It's an average of the auction markets in Colorado, Texas, and South Dakota. Obviously, that fits no one. The point here is that the feeder lamb prices are in most markets. Now, there's always differences in the U.S., especially in the lamb market, but they're similar to a year ago, in some cases a little bit lower. They're below the 5-year average. And again, the feeder lamb market compared to slaughter lambs is being buffered by these lower feedstuff costs and pretty good forage conditions, at least in some major parts of the U.S. And in the western states, we haven't really got to crunch time yet in terms of having to make management decisions due to lack of forage. In the South Dakota Sioux Falls slaughter lamb market, you can see that those are below a year ago. Again, the contrast to the feeder lamb market. And the overall national formula hot carcass price has really been under pressure. Now, this long decline right there is because USDA AMS did not report prices due to confidentiality guidelines. And they've come back online. They fixed some of the problems with the lamb LRP program, thankfully, in the short term, using the national and also this price. But it's really under pressure at this level. We do expect these prices to probably gravitate a bit higher seasonally. If we don't have another major COVID outbreak where we lose labor capacity and ability to process animals, or if the U.S. heads back into, we expect the U.S. recession is severe out to the third quarter. Maybe we're just in a normal recession by the time we get in the third quarter. So the U.S. economy is improving, but we're going to be in a recession still. We're going to be in a more normal recession as this year winds up, as opposed to the very difficult situation we've had in the last 3 months. Now, if we look about slaughter levels, and we'll come back to these price forecasts, you can see the big drop off in lamb slaughter that happened when we did not have labor, had to shut down plants. Plus, we had the uncertainty for a couple weeks going on up in Greeley, Colorado, which did not help. And in fact, it was a major hindrance. But you can see on the lamb market, we've bounced back. We're processing lambs federally inspected, not farm slaughter, not local slaughter, but federally inspected plants, has bounced back really quite nicely. That's in contrast to the hog sector, which has barely got back there lately and had a more severe decline and from a high level. So we have a lot more hogs out there. When you don't process them, they're building up out in the country, and certainly much faster than the rebound that we've had, and even we're still below last year in the beef industry. So this has again been a bit of an opportunity for the lamb industry to show their stars and get into the retail case and make some headway. It's difficult. It's a lower price market, but it's one that the lamb industry has come through a little bit better than these other sectors have. Lamb and mutton in cold storage has become a real problem for this industry periodically over the last 4 or 5 years. Now, some of this is just imported product. As you import more product, there's more frozen product and it builds up. But when we have these peaks out here where we're running 45 million pounds in cold storage, that's more than 1 3-month period of U.S. lamb and mutton production. That's a huge amount to work off. Now, we're on a pretty good plane this year. We're kind of below last year at the beginning, and we don't think we'll have this kind of bump up come late summer, which dampens the late summer and fall market, even if it does pull back. So the amount of frozen product in cold storage is not the burden that it has been in recent years for the U.S. lamb industry. It's not a great number, but it's not a number that just causes potential real pain if you can't work that off in a way that doesn't disrupt the marketplace. In terms of the supply side of the industry, this is the breeding ewes 1 year and older. These are the USDA numbers that you all report, or hopefully some of you report that get surveyed. And then they do a lot of cross-checking with slaughter levels and other comparisons. The point is here that the lamb industry in the U.S., and this is our lowest forecast in the red, higher forecast in the blue, but we're on a pretty flat if you look between those two. Lamb industry is neither really shrinking like it did in this period or certainly like that period. It's rather stable. This is not an environment from a supply standpoint and a price standpoint. There's a lot of enthusiasm in our mind for producers to expand the national flock, but not a lot of economic pressure yet that causes a real abrupt decline in the U.S. flock. So we're sort of marking time. We're marking time waiting for the economic environment to be less uncertain and the production environment to be less uncertain. This is a rather good picture considering the picture that we had where the industry economics caused these huge declines because of the lack of profitability in this sector. We're more stable. It's not very profitable, but it is a stable production environment. Lambs born per breeding ewe, we bounce around in a range that actually, from a market standpoint, has some pretty big impacts. And when we look at, the lamb consumption, demand, supply, interactions, it's a very important component. We bounced around in this range in recent years nationally. We think maybe we can improve this a little bit more, and this would be beneficial from a cost of production standpoint, but we're probably staying in this rather range. We don't see anything that gets us down to those real bad years, nor those that get us up there. Now, one of the things to always be concerned in this industry, if you've been around very long, we've had about 4 episodes where the lamb feeding industry and the market dynamics and the slaughter issues have developed a huge backlog of over-finished lambs that are practically mutton. So weights are very important. And we thought weights would be a challenge to this industry as we have the slaughter plant problems in Greeley and the issues there. And then the coronavirus hitting demand for lamb at the restaurant level, that we had a potential to back up some lambs and get these weights very heavy. That has not occurred. The recent couple weeks of run-up is something worth watching. I'm not overly worried yet, but we can create a problem in this industry in about 4 to 6 weeks that becomes a real problem. But so far, we've kept these lamb weights very manageable. The quality of the product then is very good, and it's given us this entree into the restaurant sector or the retail sector, grocery stores, with a pretty darn good product compared to one that becomes problematic when it's overfinished. So we're going to watch this. But the industry's done a very good job of managing the flow of lambs in a very difficult environment and not backing up enormously, at least not to date, dressed weights and compounding our production problems and quality problems in the sector. Colorado lambs on feed are very similar to a year ago. As of June 1, the AMS data, we haven't bunched them up. They haven't come off the pastures in the west and in the northern plains and had to go to feedlots. Certainly something to watch. But again, given the environment that we've had and that low slaughter rate for several weeks, this looks rather positive. This doesn't look as bad as it appeared to look 6 weeks or so ago. So now we're going to jump into some forecasts. Let me remind you what I've said about forecasts. This is a tough economic environment. Many of you, I think, are adults listening to this presentation. You understand that things change. Markets are not static. The environment is nowhere close to static. So this is you have to take this as a benchmark, as a broad view, and not as gospel, one that can change rather quickly. This is what we know at this point in time. And this point in time is very much unknown, let alone what the future is going to bring. But here's a couple points that I'd like to make for you to ponder here as we think about this. And hopefully Jay will tell us we're out of time here. So we have prices on a percentage. These are slaughter lambs. This is the formula price. This is the 3 market, Colorado, South Dakota, Texas auctions that USDA still provides. They don't provide as much data as they used to. Notice the first quarter of this year on slaughter lambs and feeder lambs, above a year ago, and very similar. In fact, the slaughter lambs were the highest in several years. Feeder lambs, and then came the great meltdown in prices. Second quarter slaughter lamb prices will be down fully 20%, 20% in the third quarter, maybe not quite 20% in the third quarter. That's the year-over-year change. It's going to take us till we get out here in 2021 probably till we get back to 2018 or certainly 2019 prices. First quarter, we have prices down. Then we think this industry, very little growth on the production side. Hopefully demand's going to erode because the economy is going to be still suffering, at least to some level. But hopefully restaurants open back up and we can kind of regain what we lost in 2020. And then we get out here later in 2022 and we can potentially have a feeder lamb and a slaughter lamb market that gets us fully back to here and maybe higher. Takes a lot to get there. Now, if the Lamb Board they've done a great job of promoting your product in recent years. If they can have even more success, maybe we can even do a little bit better than this. But these are going to be trying times from a price perspective. The supply side is not changing a lot, but the demand side of this industry is precarious. Whenever we're in an economic recession, the two sectors in the meat and poultry that get hit the hardest are the lamb industry and the beef industry. Almost by definition, because of the increased dependence on the restaurant industry. When the U.S. consumer pulls in their horns, let alone COVID-19, we tend to eat less in restaurants and we trade down away from high-end restaurants. Again, a major target of the lamb industry. So this is an environment that we have to do a lot of management. We have to really watch our cash flow. We have to probably do more management and monitoring than we've had to do in most years. But I think there is, in some sense, a light at the end of the tunnel. It's not right around the corner. But again, as I look back at the last 6 to 8 weeks, I'm impressed at how the industry has managed through this. And we came through it actually better than we anticipated. So that's my rambling saga. At this point, I will turn it back to our host, Jay, and maybe we'll have a question or two, or maybe you'll let us all off the hook and we can go try to digest that full meal of information.
Thanks, Jim. There's a lot of information there. With the graphs and such. Just a reminder, you could type in your questions into the question dialog box at the bottom of your control panel. If you'd rather ask your question verbally to Jim and not type it into that box, you can do that also. Just click the little hand symbol that should be on the left tab at the top of your control panel, and that'll tell me that your hand is raised. And then I will call on you by name and unmute you. So let's see what we have here for questions to deal with, Jim and Caitlin, if you guys want to address them jointly or separately, however you want to do that. Question on the Mountain State situation. Of course, everybody's wondering how that's going to turn out. You touched on that. I think what they're asking is what's the most likely outcome in particular in terms of it still being an operating plant?
I don't think we know. The lamb industry on the processing side has always been close to the vest and not very transparent. We've known that there's been financial struggles. We know that they're in bankruptcy. We know that there will be a liquidation, a sale, early August. There's a stalking horse bid by the current group, and that's been made public. It's pretty obvious who the bidders are, or won't be. And part of the concern, I would say, overall is, can we keep this plant still in the lamb segment? It's a dark cloud overhanging the industry. There's a big uncertainty here. It needs to be paid attention to. How we work through this with a new plant hopefully coming more online, and that, the fabrication capacity, that is taking the carcass and putting it into components that we eat at restaurants and grocery stores, is lacking at the new plant that's being built in Brush. So this is certainly something to monitor, but we won't have a good sense, I don't think, until after early August when the chips fall where they may.
And speaking of the new plant in Brush, question right on cue was, what's the latest information? You touched on it a little bit there, but how soon would they be coming online as far as the latest information that's out there?
Again, this is a plant that's been a bit delayed, you know, quite a few months, actually quite a few quarters. You know, I think it's going to kind of be wait and see. I've in my career, I've stepped forward at times with guesstimates, and this is a guesstimate, and you know, really, but I think it's much closer than it was to operating, clearly. We don't have a big buildup of lambs on feed in Colorado that we got to find a home for in the short term. So again, if these two work out some way, I can see a path forward, but I think it's too close to call.
Okay, a question. Well, it's a two-part question. First part is, should we ramp down or ramp up our production? And should we be trying to target more of the non-traditional market with that production?
So Caitlin's going to chime in on this one, so I'm giving her fair warning here. So ramping up or ramping down, I assume you're talking kind of about holding back more ewe lambs to increase the flock. Mm-hmm. And I think that's probably the tone of the question. I'm going to guess that. So I'm going to go with that forward. You know, it appears if we look at the national numbers that we haven't held back many ewe lambs, and it seems to be supported by the slaughter levels, et cetera, over the last couple of years. And, you know, as an economist, I like to think that, you know, you kind of want to be a little bit contrarian. You know, you don't want to go with the herd. You want to do a little bit the opposite of what other producers are doing. Those tend to be the opportunities in the agricultural space. But it's risky. We have very little ability to lay off the risk of those strategies. In the lamb side, we do have the slaughter lamb LRP product, but not compared to what we can do in the hog industry, certainly the beef industry. My sense is, though, that, you know, and we have predator issues. We have a whole plethora of issues in the industry. But those that are well positioned, you know, my prices are a bounce back in 2021. So I don't need to get too aggressive here, but, you know, we haven't grown this industry. And if we believe that the demand for our high quality product can continue to be built in this industry from the base that is really eroded over a multi-generational period. But I don't think you ever go whole hog. I think you do this in a very measured way, given the uncertainties at this point in time. You know, you don't jump and hold back all the ewe lambs. I think you do it very methodically, and you think very carefully, and you really study that forage base to great detail. Or if CRP acres open up that you might be able to use, you look at that very carefully in your area. So I don't think it's a time to be, you know, in the cattle business, we talk about being real counter-cyclical. There's not really a cycle left in the lamb industry. But I think it's a cautionary environment. And and I think non-traditional markets are important. I mean, getting closer to consumers is important for this industry. But we still are basically, to the largest extent, a commercial industry. And long term, we're going to rely on high quality product going through grocery stores and restaurants still to be the mainstay of the overall national industry, with clearly some very different regional aspects in the northeastern states and the northwestern states especially. Caitlin, do you want to add a couple thoughts here on how you position? You've been a banker, et cetera. Give us some thoughts.
Sure, I'm going to go back to a few things that Jim mentioned earlier. So one thing I keep in mind is that the economic picture, although we pointed to some very positive things that have happened here in early June and late May, is still pretty uncertain for what that means on the demand side. And some of the boost we saw at grocery store levels was much more on the commodity front than maybe it normally would be. When we saw beef, pork, and chicken flying off the shelves, and some of those meat cases empty, that really laid an opportunity for lamb in those grocery store fronts. And so now that we've worked through some of the slaughter and supply chain issues in those other markets, there's going to be, even if it might not be record high levels, we're still going to have very high levels of production in these competing meats. And so for one thing, I would say that those grocery store sales are going to be under pressure as a consumer is still rather uncertain, at least in the short term, but may turn around by 2021. In the non-traditional market, I would say could possibly isolate someone from some of those larger headwinds that we're potentially facing, in the sense that they have a much more specific role in the diet, as opposed to what I perceive some of the 2020 reaching for lamb was more as an alternative to some rather empty shelves in the second quarter.
Thanks, Caitlin. And that gave me time to, I'm going to make two other comments in this vein, and maybe we're just eating up all the time there for you, Jay. But so when we're positioning in the long term in this industry, you know, especially in the non-traditional, you better understand your cost of production, whether you're selling this above your cost of production, and looking at cost of production as an economist would. And I think if you're going to expand, you need to really do a deeper dive, cost of production, forage base, et cetera. And then if I'm going to expand, I want, you know, the key across the animal-based proteins is increasingly becoming quality. Now, I'm an economist, so I'm going to talk about cost of production and competitiveness. But part of the reason I think we've been able to make some inroads on lamb demand and beef demand has been the quality of the product that we've started to produce. If you're not a high quality producer in the lamb meat marketplace, you need to be if you're going to expand. I think quality is going to be one of the real driving aspects of being profitable and sustainable in the beef industry and the lamb industry, because we have higher costs of production in the lamb industry and the beef industry than we do in the pork, chicken, and turkey sectors, and probably the fish sector too. So, you know, there's a quality dimension that really does tie to the demand story in the long term, and being able to play this game in the longer term and expand. And you better be on the quality forefront, not forget about quality, don't forget about fundamental economic costs, but you better build in the quality dimension.
Good. Thank you both. We've had several questions come in regarding, I guess, processing capacity. So I'll try to group these together in a sensible way. So people are asking, are there enough lambs to support 3 lamb plants in the state of Colorado? And coupled with that, the example was given here in the Northeast, New York and New England in particular, processing lamb is nearly impossible. So you want to respond to that in terms of where the lamb plants are located in the country?
You know, where the plants are located in the country has become a problem for the beef industry and the hog industry too. The scale at which we operate, even in the lamb industry, we've shown some weaknesses in our industry. Now, in the lamb industry, you've done some more creative things. The processing is an issue, especially for local market programs, and it's an issue for all the animal-based proteins. Colorado is the largest lamb feeding state, lamb feedlot state by far. So we pull a lot of lambs for, you know, we're a highly seasonal industry, and the feeding industry helps us spread that out and get us to time frames of the year when we need the tonnage in the marketplace. So, you know, Colorado has 3 plants, 3 federally inspected plants, or will have, we hope will have. We have one in Denver that's had some investment put into it by Superior, apparently. We have one in Brush coming on, and one in Greeley that's Mountain State. So, you know, it's an issue across the animal-based proteins of where the slaughter plants are, and the issues of getting animals processed should you have a COVID-19 or a hoof and mouth disease where you can't move animals long distances to get them processed. You get a similar set of circumstances if you have some animal disease issues, especially foot and mouth disease. So there's some things to think about in this industry, and talking about scale and state-of-the-arts. Now, the lamb industry is going to have 2 state-of-the-art plants, Superior plant in California and the new one in Brush. Those are state-of-the-art facilities. I wish I could say that we had state-of-the-art facilities in the beef industry, but we don't. We have 2 modern state-of-the-art facilities in the hog industry. So this whole area of slaughter capacity, slaughter quality, scale of capacity, the economics of size and scale, and how they fit into local markets is something we really need to work on as an industry. And your question's very well taken, and it will probably be the question of the next few years that underpins the whole animal-based protein sector, including the lamb industry. That was kind of a non-answer, Jay, because apparently I don't really know the answer to the question.
Are you getting into politics in your retirement? No, you didn't.
Heaven forbid.
Talking about the quality of the meat, question asked, should we be changing breeds to focus on meat rather than the do-everything breeds that we see, like Rambouillet?
Okay, Jay, I'm going to fess up here. When I was an undergraduate, I got a very poor grade in chemistry, and I got to retake that class. Apparently, if you get a D, you can retake it or something like that. I struggle to be an economist, and I'm not an animal scientist. I understand the quality. The quality research from an economic standpoint has been clear-cut, especially in the beef industry, for over 15, 20 years now. So, should we be doing different things with breeds and all that? That's a subject for a different set of expertise than Caitlin and I. But I think very germane. I think there's been some, and I've sit on presentations on the lamb industry, seen what CSU has done on the meat and the flavor profiles, et cetera. I think there's a lot we need to do here, and a lot now we always want an animal that fits our economic environment in terms of our forage base, weather, climate, et cetera. So we never want to go too far. We've done that in this industry and other livestock industries. But I think that's a topic that we will put on to your future calendar.
Thanks. So we had a question on the supplies and cold storage, and I don't know if you want to go back to that slide or not. It might help explain your answer. Yeah.
Anybody remember where that one was?
Let's see. It was more towards the end than where you're at there. Now I can't find it. Slaughter lamb prices, sheep. There you go.
There it is.
Yeah. So the question was about the high levels in cold storage. And it struck me when you had this up here, the 5-year trend is there, but we've been above that, at least the last couple of years. So the question was in regard to production, and will the U.S. level of production really matter in light of the fact that we have relatively a lot of lamb in cold storage and where we're headed there historically compared to where we have been?
Yeah, cold storage has a couple functions. If you can't sell the product, you try to put it in cold storage and hopefully make money later. But cold storage is also a mechanism tied to that concept where we're spreading out our supply over the year, right? We're taking a seasonal production system and we're having more product available. You can see the rundown that we had from the huge level where we have over 45 million pounds on a carcass weight basis. That's more than 3 months worth of production, domestic production, sitting in cold storage. But we work that off as a seasonal lamb supplies tend to be lower in this time of year. So it does serve an economic function and a market function, kind of like lamb feeding does, to help spread out the supply of product over the year. Now it can get too large. And again, some of this product is just imports. Now it has to be not planned for sale in the near term by USDA to be calling it cold storage. But, at the levels that we have here now, given how the industry is, these do not worry me like a couple of years ago and like that 45 did up there. And could we work it off without causing a real breakdown in the wholesale lamb marketplace that feeds back into slaughter lambs and feeder lambs? So certainly something to watch. You can't store lamb in cold storage for that long. A turkey that you buy at the grocery store is sometimes 2 years old. It's been frozen for nearly 2 years. Most of them are only frozen for a year. But the red meats, you tend not to be able to freeze that long, so you've got to turn it over in cold storage. We really don't know the types of products that are in cold storage. That's because of confidentiality USDA guidelines. There aren't very many freezer facilities that store lamb, so they can't give us as much detail as we would like. We don't know the proportion that's imported. We don't know the proportion that's racks, for example. A few years ago, anecdotally, the industry said there's a lot of racks in cold storage. Well, that's a different product than a lot of backs or a lot of imported product. So it's sort of it's not real clear ever what's in cold storage. So it's one, I wouldn't bet the farm on cold storage levels. We need to watch it, especially in this industry. In the other red meats and poultry, cold storage doesn't really make a difference. But in lamb, it's a little bit like the grain markets, where the year-end stocks, where you are in stocks in storage, must be watched much more carefully than it has to be watched in beef, pork, chicken, or turkey. Again, another long answer, Jay, with very little answer in there.
No, that was very educational. And the other part of that question was about imports, too. Would you like to respond to that in terms of the imports that come into the country and when? If I heard you correct, you're anticipating less competition from imports over the next couple of years while they rebuild their flocks.
Yeah, certainly from Australia, that's the sense. New Zealand has a little bit of a drought going on now. And, if you look at the Australian industry, they have the smallest flock in 30 years. Meat and Livestock Australia just yesterday or today came out with their sector update, their June forecast and their update. And if you're interested, go look at that publication. I can send it to you, Jay. I think I already did. But it gives, a very good perspective on where they are. They also think in Australia, to be honest, that they'll rebound on their flock and their cattle herd after drought much quicker than they ever do. Because, it tends to be a dry country and producers are somewhat cautious. So, but these imports are tied to the international dynamic. Again, that story is changing because of the China story and the closeness that Australia and New Zealand are, and they increasingly rely on lamb exports and mutton exports to China. So I think that import story is changing. We're still going to import more lamb than we produce domestically. It's part of providing product you can debate all the politics, you can debate the whole thing, but the reality is that imports they're not growing a lot, but they're not going to decline either, Jay. So I call that a positive, right? We're not going to face increasing supplies of imports to a dramatic level unless they have another drought in Australia. But it's not going to go down either. So it's, that's kind of an economist view of positive, right? It's not getting worse.
It's as positive as we get. So we do have quite a few smaller producers in the category of around 100 ewes or less. Do you have any advice for them in terms of the market environment and things they might think about as far as, because they're not utilizing large feedlots and shipping big truckloads of animals?
Well, I think the smaller producers have the same set of opportunities. I mean, if a CRP opens in your area, you got an animal that's very much can work on that type of forage base. So there's always opportunities, and maybe these are complementary animals to an overall enterprise or for a supplemental income thing. So I think you still have to pay attention to the same basics here. If you produce a quality product and you're selling directly, it's about quality, it's about price, and it's about being able to deliver. So smaller producers, you tend to actually have to work harder than the bigger commercial operations are in the Great Plains West and some other parts of the U.S. So, but you've got an animal that has a lot of potential. Use it effectively, but I think you have to pay just as much attention if you're trying to make some money doing this. Even if you're selling show lambs for 4-H projects and FFA projects, it's about quality. And I think that's part of what you need to work on. Do we have any really good grand insight? Jay, I hate to admit this, but we're economists. And, we paint the big picture pretty well. In local areas, this is a local industry, like much of agriculture actually is. The local forage base and the local marketplace, especially in the lamb industry, and spending a little bit of time trying to understand that will go a long way. But no silver bullets. There's no silver bullets for the small producer. There's no silver bullets for the large producer. I hate to tell producers that, but I'm about to retire, so I'm being straight shooting here.
Thanks. And we did have a question
Caitlin, Caitlin's worked across the industry as a banker, et cetera, too, so she's probably worked with more small producers on the eastern U.S. in her stints as a banker than I have.
So
maybe Caitlin's on mute.
Well, unfortunately, I'm an economist too, and so I struggle with the same things Jim does in terms of painting the big picture.
That's fine. We did have a question come in on the lamb quality side. Let me preface this with couple of statements. My experience is buyers love our lamb quality, but do not want to pay for it. If I have a below average lamb, they pay the same for it as my top quality lambs. So when you're talking about lamb quality, their question is, are you talking about the market as a whole, or are you talking about producing quality lambs and trying to get into more of a specialized market?
I think it applies broadly. So now I'm going to change gears on you and talk about the beef sector for the last 20 years. For 15 until the last 5 to 7 years, I would roughly put it in that time frame, we had constant debates whether you were being paid for quality. And it comes often a bit indirectly in your marketplace. Beef demand has gone up dramatically in the last 10 years. And much of that is this indirect influence of a high quality product. You're competing against pork, which is not improved quality. In fact, the loin has declined in quality, and chicken that has declined in quality. Those are increasingly a commodity product. And I work for those industries too, especially the pork industry. So quality often comes back in very subtle ways in the overall demand profile. Those of you that are primary producers, that is, own breeding stock, you're what economists call residual claimants. Things that go on around you, you get to suffer the bottom line. The lamb feeder is a margin player. They will find the price, bid for feeder lambs appropriately, trying to make money. The lamb packers doing the same thing. They're called margin players, and so anything that really goes good or bad in the industry will come back to the lap of the fundamental producer, cow-calf, and those that own breeding lamb flocks. So you need to understand that sometimes this being paid for quality is very subtle. I would say that your data from your research that you've done on lamb demand has been pretty positive the last few years. So your quality is subtly paid off in these prices. Now, when it comes to individual loads of animals, this is a bit of a marketing problem, right? This is down to trying to get paid for the quality. Unfortunately, in the lamb industry, we don't pay for quality under grids for most producers, even at the local level, like we do in the cattle sector or in the hog sector. So I think we have a ways to go here to bring that to the local bidding process. But you've been paid somewhat for this quality indirectly, that the whole industry has benefited from your genetics and the quality of lamb you're producing. So don't think you just never get paid. Sometimes it's really hard to see it get paid. And I agree with you, at the local level, we have some kind of these market structure issues where we need to be paying on a quality basis much more for lamb than we do today, more like what the beef and the hog industries have done in this country. That was sort of political again, Jay. Apparently, when you're almost retired, you can say things like that.
No, it's okay. Okay. So you mentioned all the mutton coming in. We'd had a question on, and I don't know if you can answer it or not, but the question is, who is importing and storing mutton?
Well, that's a good question. We surmise, which isn't knowing, we don't know. But we know, for example, we use a lot of lamb and mutton in the U.S. pet food industry. Pet foods have changed dramatically in the last 5 years. People that think they're vegans and vegetarians and flexitarians and whatever they are, they want to feed their cats and dogs animal-based protein. They don't want a lot of filler in there. Apparently they want to eat plants that are a bunch of filler in their hamburger. That's a different rant of mine. But some of this is probably going into that sector. We export a lot of mutton to Mexico. Big proportion of the U.S. ewes that are slaughtered, the mutton's exported to Mexico. Some of this could be transshipped eventually after it's frozen right now, probably. And it may be, we have these cold storage facilities in the U.S. You don't have cold storage in China. You don't really have cold storage in Australia and New Zealand. So some of this product probably flowed here, and we're kind of waiting to see where it's going to flow to. But you ask a question that it's really hard to put our finger on. Again, the recent data appears to say that this maybe was a bit more transitory than the first 3 or 4 months of the year look like. But we'll have to wait and see.
Okay. Well, I think I've pestered you long enough with these questions. Thank you again for, those of you that don't know, Jim is retiring, and he let me know that this is actually his last scheduled presentation for LMIC. So I'm doubly honored to be able to host it and share this with our listeners. So Jim, really appreciate your service to the industry over the years. You've done a fantastic job, and really wish you well in retirement.
Well, thank you. We definitely appreciate your invite. Speaking to producer audiences, and that is not our main deal at the LMIC. We work behind the scenes, as Caitlin described, working for the universities, working for the USDA, working for the industry associations. So it's a real pleasure to hear from producers and hear what you're thinking and share some of our thoughts. So thank you very much for the invite.
Yeah. And Caitlin, thank you for your leadership at LMIC. And I know you guys will continue to do good work there. And we really appreciate that and the information you guys get out to people.
Thank you, Jay. Happy to help anytime.
And for our listeners, our next scheduled Let's Grow webinar will be on August 4th. We're going to have Danelle Bickett-Weddle on from Iowa State University, and she's going to present the Secure Sheep and Wool Plan to us, which was just recently completed. So you can mark your calendars for that. That'll be August 4th at our usual time in the evening, 7 o'clock Central, 8 o'clock Eastern, 6 o'clock Mountain, 5 o'clock Pacific, or you can subtract from that wherever you go. So we look forward to having you on that. We are going to have the registration information out for that within the next couple of weeks. So look for that in the ASI newsletter, and we hope you all come back and join us for that. So once again, I want to thank Jim and Caitlin for the LMIC presentation this evening. It was really informative, and we really appreciate it. And I want to thank the ASI Let's Grow Committee for providing funding for these webinars, and for all of our attendees for joining us tonight. So with that, I'll go ahead and wish everybody a good evening.